All right, hey everyone. Mark here. Hold on, adjusting my microphone. Mark Pre-Markets, Mark Principato. Thanks for joining me. I'm a chartered market technician, in case you don't know. Welcome to another Greenbridge Investing market analysis session here. I'm not simulcasting on TradingView because I haven't solved that problem yet. So anyway, just YouTube today, which means I can answer more questions. If you're new to my stream, please share your market or your stock or your altcoin in the chat now. If it's an altcoin, please put USDT or USD after the symbol so that I get the symbol right and we can all look at the right chart. All right, so with that being said, let's get this thing started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, good to see everyone. Say hello to a few people. We got Elijah, Peter, we got David, good to see you. Elizabeth, all the regulars. Hey, Mustafa, good to see you. Jose, Susan, Gotham, David. All right, cool. Oh, Schwartz, of course. We have Schwartz, International Man of Mystery. We got all the regulars here. Cool. So today is Monday, as you know, and we have a lot of important economic news this week. I want to just touch on some of those important events first. All right. So I'm going to go over the economic calendar. Oh, Gmail, send me 350 coins. Thank you so much. You don't have to do that. I'm not even on TradingView. I appreciate that, though. Thank you very much. I appreciate that. It's nice to at least know someone appreciates my work. I mean, most of the people here do. Thank you. Thank you. Again, very generous of you. Okay, so let's talk about this economic calendar real quick. I don't want to spend a lot of time on it, but there are some very important events. So let's start out with tonight. We have at 10:30 p.m. Eastern Time, we have the Royal Bank of Australia interest rate decision, okay, and their rate statement. That's important, but obviously for the Aussie pair. That's not a big dollar mover. Now, tomorrow we have New Zealand unemployment rate and then their employment change. Again, those aren't really the big numbers that the market's going to be hesitant about. We also have on the 3rd now, which is Wednesday, we have ECB President Lagarde speech. All right, no big deal, who cares? But we have for the US, we have ADP employment change, ISM manufacturing PMI, right? That's earlier, that's probably, I'm guessing, 10:30 a.m. Eastern time. I don't have the timestamp here. And then we have the Fed monetary policy statement and the Fed interest rate decision, the FOMC press conference. That begins usually at 2 p.m. Eastern time, and the press conference usually begins at 2:30 p.m. Eastern time. This is very important to know because it will affect the market today, tomorrow, and going into Wednesday. That's why it's so important, something like that. And I'll explain why in a moment. Also, we have, on that evening, we have Australia trade balance. Again, no big deal there. Now, on the 4th, which is Thursday, for the British pound, we have their monetary policy summary, asset purchase, blah, blah, blah. They have their vote rate cut, Bank of England minutes. So they're going to have their, I guess, their equivalent of an FOMC. So important, plus the Bank of England Governor Bailey's speech. So that can affect the pound, and the pound is a mover. So if you're in Forex pairs like the pound or a pound cross, you should at least be aware of that. But something like the FOMC is still a bigger deal. Also on the 4th, we have, again, another speech from President Lagarde, the ECB president. We have the Royal Bank of Australia monetary policy statement. That's on the 4th. I thought we were having, what did we have? They have their Royal Bank of Australia rate statement interest. Oh, okay, I guess they're having another statement, okay, on Thursday, right? I thought it was the same statement. Anyway, these bankers. On the 5th, we have European retail sales, and then we have, at 8:30 a.m. Eastern Time, non-farm payrolls, NFP, which is next to an FOMC meeting, the most important scheduled economic event that we need to be aware of. All right, again, we can't trade on these events, but you need to be aware of them, especially if you're involved in stocks, if you're involved in Forex, because if there's a big move in the dollar as a result, things can get out of hand very quickly. Now, in recent times, let me finish the calendar here. On the 5th, we have Bank of Canada unemployment rate or whatever, and then their net change of, that's not a big market mover. So the main ones to pay most attention to this week is the FOMC on Wednesday and NFP on Friday. Now, again, why this is so important is because it can affect volume going into those reports. Now, we cannot sit here and try to second guess what the Fed is going to do. None of us, at least that I know of, have inside information. I certainly don't. I don't know anyone at the Fed, okay? So we don't know what they're going to do or how they're going to do it. My impression from previous meetings and statements and other things, basically, they tend to play a political game. That's just my opinion. And they tend to like to appease the market. And they don't say anything dramatic usually. But that doesn't mean they won't do it this time, right? So the point is, you need to go into this with a risk management point of view, right? So if you're in stocks, you have to understand like what stocks should not do if the market goes the wrong way, right? And that's what will help you, especially if you're in swing trades. If you're invested and you're in position trades, well, you know, it's a different story. It's a different game. Hopefully you own those things from much lower prices, right? And it's not going to really matter too much. This is really more for short-term oriented, swing trades or day trades where you really need to be cognizant. Now, like I said, not going to second guess the Fed, not going to second guess NFP. The objective here is to let the information come out first and then let the market figure it out. Again, there's a lot of people out there that have inside information. I'm talking about banks, governments, hedge funds. I mean, that's who pretty much moves the dollar, and they probably have some advance notice on some of this stuff. And I'm going to get into that more in a moment when we take a look at the dollar. But the point is, the market has to figure out, okay, the population of participants that are active now, they have to figure out what they think of that Fed information, okay, how it's going to affect the future perception. Let them figure it out. Let the price action determine the next tone of the market, and whatever they come out with on Wednesday could set the tone for the rest of the holiday period. All right, so again, I'm not going to sit here and guess if it's going to be positive or negative for the market. The market will let me know, and then we adjust. And then again, this is very important for swing trades and day trades in particular. All right, so so enough of that. Let's get into Bitcoin. Again, I want to touch on stuff. I bring up all this Fed. I talk about all this Fed drama because it's going to be important when I bring up the dollar chart. And people should be paying attention to the dollar chart. Now, let's start here with Bitcoin. I'm going to run through Bitcoin first, and then we're going to take a look at the stock market real quick. A couple of stocks maybe if I just want to make some examples. And then we're going to take a look at gold and the dollar. These are the broader markets. You should keep an eye on these things. And the reason why I go over these things every week is because they can set the tone for your stock or for your currency or for whatever, right? They can basically affect the smaller market that you're in. So you need to keep an eye on them, and they can serve as a good timing or risk gauge. All right. Let's take a look at the stock market. Let's take a look at Bitcoin first. Those of you that read my TradingView article yesterday, I talked about this blue box, right, which is a resistance zone that's relative to the 64K resistance. As you can see, price is having a hard time there. Now, there was another potential buy signal. I talked about it in the article, but I mentioned that you're buying into resistance, right? That actually go off. Let's see. The high is 62,438 is yesterday's. What's this high over here? 62.5. And basically the number I was saying was 63, right? I had to push 63. So theoretically, that aggressive idea never materialized. Instead, price is just fooling around, which is fine. Now, as you can see, there's not much going on here, right? Bitcoin is stuck, like I put in the title here of this video. Bitcoin is stuck. So what do you do? It's just about outlining your scenarios and letting the market align to one of them. That what I described yesterday in my TradingView article was one aggressive continuation pattern type of scenario. But the scenario that I would like to see is the pullback and possibly double bottom, maybe off of this 57K support area. That would be nice, followed by a buy signal. That would be a much higher probability setup and pattern rather than taking these continuation patterns, which are tough. What makes them tough is the attention that they require. If it goes and the momentum follows through, okay, great. But if the momentum does not follow through and it gives you a hard time, that's where you need to really start paying close attention. Like in this area right here. If it fakes out there and all that other kind of stuff, then it's still consolidating. And it's possible then that it may test the support. That's why you can't get sucked into all this nonsense. It's unbelievable how many titles I'm seeing on YouTube, and I'm seeing more and more with the word millionaire in them. It would be so nice if there was a way to have like an algo, observe a certain number of these titles in a particular niche over a particular period of time, and then compare the increase or decrease of these titles. Because I'm willing to bet that when there's a certain percentage of these YouTube titles with millionaire, you'll find the market top, right? Or the market top in terms of sentiment. Doesn't necessarily mean price will peak at the same time. But if the sentiment peaks, which would probably peak first, it means that the market probably doesn't have much more to go in it, right? When everyone's going to be a millionaire, that's not a good sign, right? It's a very contrarian type of sign. Anyway, so as far as Bitcoin goes, there's really not much to do here. If you're buying into this potential breakout, it's possible that it breaks out. If it breaks out, it should test 67K over the next few days. It's possible that, maybe the FOMC can act as a catalyst for something like this. Usually it's not very sensitive to that, but hey, things can change, right? But that aside, the 67K area is basically the next area where it should test based on this structure. If it tests it, the question is, does it break? Maybe it breaks and we get a higher high. That's all possible. The general structure supports that idea. And we do have a higher low off of 57K. We're just still consolidating. So you have to determine if you're willing to take the risk. This area right now, like if you buy the 63K, then you're looking at least 4,000 points of risk. So 59K would have to be your stop, which is likely to get touched if this continues to be in a consolidation, right? The problem with consolidations is you can get all kinds of buy and sell signals in them, but they don't really mean anything because the trend is not in play right now. The broader trend, which is bullish, is not exactly in play when it's consolidating. It needs to break out of the consolidation. Trying to get into the trade before that breakout is tough, and it's possible, but you need to be willing to take the risk, which means you're likely to get stopped out, and you have to be willing to make adjustments if this thing gives you a hard time and tries to break out and fails. This is why I don't like to send out aggressive trade ideas, because then I get texted, oh, you got to send out an adjustment. But I tell people what the story is. I can't hold people's hands. You know what I mean? Adjustments, that's your job. So the thing is, I don't like to give those ideas, because if it fails, you have to do something like take the trade off, take a small loss, take a small gain, because that's not how it should behave when it's trying to break out. All right, so that's the Bitcoin situation. So it's not bearish. It's just not in it's not in the best location, and it may improve somewhat location-wise, meaning maybe we get 57K, and maybe we get a reversal there. That, even though it's not the best price in the world, it's much better than here, because the reward risk is much clearer, because we have a clear support at this low here, 56 whatever, okay? That's a well-defined low, and I can define risk from there. And I'd be very happy to take a trade near that area and use that as my reference point for risk, okay? And maybe that's the consolidation bottom, and then maybe it breaks out from there, possible. So if that level is cleared, meaning we test it, we break it, and we start pushing lower, then I would hold off on longs, because if this consolidation is going to hold, then it shouldn't be breaking supports. It should be holding them, right? So anyway, so that's the situation. It's very conflicted, and that's why you're better off waiting in these situations, I think. But again, it depends on your aggressiveness. Now, let's take a look at the NASDAQ. Again, I see people's questions. Thank you for asking all these questions. I will get to them. So just be patient, please. But thank you for asking your questions. All right, here's the NASDAQ. All right, now look at this. This NASDAQ has been ridiculous, right, in recent weeks. I talked about the higher low and all that stuff in other streams. You've all heard it, most of you, right? So you know what I'm talking about. Now, this is all about location. So this area right here, this area, it looks amazing, right? Oh, it looks like a no-brainer. Just buy anything in the NASDAQ. this is a highly vulnerable area. Highly vulnerable going into the FOMC and going into NFP. No way should you be taking swing trades in highly correlated market stocks at such a location. They're very risky. This thing can pull back very easily. Now, keep in mind, I'm not bearish on the NASDAQ. I just don't like buying resistance levels. I don't like buying highs. And you all know that. You hear me say that all the time. And I'm not going to change my mind, right? So I want to see support levels. Now, keep something in mind here. There are a couple scenarios in terms of the type of support levels we could see over the following week, right? One scenario is maybe we get like the tight little very minor pullback followed by some sort of little mini consolidation, kind of like this price action back here, okay? Something like that. We get a little mini one of those. That would be ideal somewhere in this area right here. And perhaps another buy signal develops from there. That's possible. And that, it's aggressive, but at least it's better than buying the high. And at least you have some confirmation at that point that the buying will continue. Because again, we are in holiday mode. That's one reason why, I'm not very interested in shorting something like this or going counter trend, because while this could be the top, it's very likely that the optimism, because, I'm seeing Christmas decorations for sale like now, but actually I think they were there a little earlier in some of these places. With that kind of optimism, that means something, okay? I know it's just in this area here, but if that's the optimism that you're going up against, stock prices are probably not going to be affected dramatically unless there's a specific catalyst. So it's possible we get the tight pullback, okay? It's also possible that maybe we get a steeper pullback, but something that maybe makes some people uncomfortable. But again, it's just buy the type of pullback that everyone's just going to buy into anyway, like they've been doing for a year and a half. Now, it's also possible that you get the dramatic pullback. That dramatic pullback, it won't be like one candle, but it can start off initially with a serious candle. Okay, when you see like someone like a large candle, like something like this, and maybe that comes as a result of NFP or whatever, then that usually sets the tone. Okay, and then often that will be followed by like a little attempt to buy, and then you see the next bearish candle, right? That kind of thing. So if we see something like that, you just want to step aside and let the thing stabilize. So again, in this environment, with all the stimulus and all the other nonsense going on, I'm not really expecting anything too dramatic on the bear side. It would just be nice to see a support level, even a minor one, if you're going to get involved in stocks. Now, let's talk about some of these stocks real quick, because what stocks am I talking about? Well, market stocks, right? So Apple. Apple is basically the NASDAQ. Hasn't really, they had great report, blah, blah, blah. They beat this, they beat that, blah, blah, blah. The stupid stock is what? Minus 82 cents today. Who cares, right? The point is, they buy the rumor, sell the news, right? Such a great stock. Why isn't it rallying? Other stocks, let's take a look at Microsoft, another one, great numbers. Oh, it's a little red today, but look at this. It's ridiculous, right? This is what's been driving the market. What about something like Google? Pulling back today. I guess people weren't happy with something, I guess. Look at this outside bar. Now, let me show you something else. If you look at FANG, this is basically the FANG stocks together as a group, and it has its own chart. This is interesting. You know why? Because the NASDAQ made all-time highs. The S&P made all-time highs. The FANG group has not. So I would take that as a red flag, right? That this market is not as optimistic or as strong as people think and all that kind of thing. But it doesn't mean I'm going to short it either. All it means is we're vulnerable prices. And I'd like to see a pullback. See how this thing behaves around the support and this and that. It looks very similar to the NASDAQ chart, but it's not exactly like it, right? The NASDAQ made new all-time highs. So just something to keep in mind. Now, so that's a couple of those stocks there. If you look at the semiconductors, AMD, strong, right? Look at that, higher low. That should lead to a higher high, except if we're in this vulnerable environment, if the market pulls back, well, as great as this looks, this will turn red, right? That's what you have to keep in mind with stocks that follow the market, and why you have to use the S&P first before you look at your stock. This stock looks great. If this was a biotech stock, I would be interested in something like this, but it's not a biotech stock. Biotech stocks tend to do their own thing. they tend to be driven on specific pieces of news. Something like AMD is going to follow the semiconductor index, and it's going to follow the market most likely. It's a market stock. All right, so just to kind of give you the difference there, why that's important. So you should know what type of stock you're dealing with. But if there's a dramatic move, right, S&P pulls back 100 points, 150 points, 200 points over a couple of days, most stocks will be affected somewhat by that. But to what degree is likely to depend on their correlation. All right, let's take a look at the dollar or gold. All right, so here's the US dollar. And I bring this up a lot. This chart is not a bearish chart, right? We've had some attempted reversal, bearish reversal here, head and shoulders, blah, blah, blah. But we had this strong bullish move on Friday for whatever reason. I forget, I think there was some news, whatever. I don't care. I don't pay any attention to it. All I know is the dollar has not broken its support at 92, and it bounced off of that, as you can see, dramatically. This chart is not bearish, right? So what does that mean, and why does that matter? Because who trades the dollar? Banks, hedge funds, governments, right? And they probably know something. I mean, the governments, they make inside information. They're the ones that make the economic policy. And if this index is going to stay strong like this, then the smart money obviously is positioning for something. Because little Forex, it's not the little Forex retail traders that are moving this thing. Now, with that being said, if the dollar is generally strong and stays in this trend, we have a higher low off of 93, I'd expect a higher high, right? Especially going into possible FOMC, possible NFP. If this thing makes that higher high, it's going to start to put pressure on things, right? And that also implies rising rates. We've been looking at this for months, and it keeps working its way higher and higher. It hasn't had an effect really on the stock market or anything just yet. But if it continues this way, then that kind of puts a top, on some of these things, right? So let's take a look at gold, speaking of top. Because gold is one of those markets that, everyone jumps on. It has like one nice day, and everyone says it's going to, 10,000 or whatever, and it doesn't go anywhere. So the resistance on gold is this 18 quarter, what is that? 18 quarter area, right? You see that? And it hasn't broken it. So we keep pulling back a little bit. We keep finding higher lows and this and that. And if gold wasn't so sensitive, I like the structure. All right, I'd be interested in this inside bar to go long because it's got higher lows. I'd be expecting a push to the higher high. The reward risk makes sense somewhat, but we're fighting the dollar. And going into these economic reports, the dollar can do something very strong, and you will see gold minus 30 points again, right? So that's why in this consolidation, clearly gold is in a range. 18 quarters the top, 1750 is basically the bottom. If you're going to get involved in something like gold, wait for the bottom, wait for the range low, right? You have to wait for these things. In an environment like this, if there are not a lot of trades to take, what you should do is plan, right? Find your levels. If you're looking more for inventory, find the levels that are within reason that you'd be most interested in, and you can even put limit orders in advance if it's inventory, not for swing trades. All right. So anyway, just those are the couple of things I wanted to touch on. Also, one more thing is the bond market. All right. Now look at the bond market, because we can get a lot of clues about the dollar from here. Lower highs, lower lows. We have a potential lower high in effect here. Basically, a sell signal was given off on Friday. But what do we have right now? What are these? Bullish pin bars near the bottom. That's not good for shorts. So what's going on here? Again, it's mixed. I can't make any judgments on that, because the general structure is still bearish, and lower bond prices means rising dollar, right? So if this thing makes the lower low after the FOMC meeting, or it gives us a red candle, then most likely he said something hawkish, right? Most likely he said something about the interest rate schedule, and they're going to raise sooner than everyone thought, and blah, 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 okay? I don't need to hear what he has to say. I can look at the chart and guess, oh, he probably said something hawkish. So just something to keep in mind there. This is mixed. Can't make any judgments. Either we make the lower low, which is what the structure favors, lower low, or this thing turns, okay? And a dovish report or some sort of dovish outcome, whether it's from FOMC or NFP, can turn this chart around. Maybe this is a higher low. Maybe it changes the structure over the following week, which will change the dollar situation. If we go back into inflation mode, meaning dollar starts breaking supports, then hey, everyone be happy. Stock market should continue higher. Gold should start going higher, break that resistance and all that other stuff. So that's why it's so important to keep that macro view and understand how the dollar plays into all of this, because it can shape the type of trades or investments that you want to take, especially over the next couple of months, okay? Because again, they're going to have to raise rates soon. They're going to have to do something, otherwise we get hyperinflation, and the Fed will give us more, I guess, this FOMC meeting, the Fed is supposed to highlight that more, how they're going to handle this. And it may not be as bad as the market thinks, and the market may rally. So again, we can't second guess these things. Just have that information in the background, and then use your charts for the levels and for managing risk. That's really, I think, the best use for a chart, mostly, is managing your risk. All right, let's take a look. Let me go to your questions now. Let's see, how much have I been talking for here? Oh, man, too long. 5 minutes too long. All right, let's go back to Bitcoin. And again, I appreciate everyone's questions. I'm going to see if I can answer as many as I can here. Thanks again for stopping by and participating. By the way, if you can press the like button, that's always helpful. And if you haven't subscribed to the channel, that's also helpful too. I got to start getting this YouTube algorithm going here. It's something I don't do, and why my numbers are so low compared to all these fake gurus who talk about becoming a millionaire and get 250,000 views on a video. All right, anyway, Eligius. ATVI, okay. There were a couple of questions that people asked in my previous stream, and I couldn't get to them. I think ATVI was one of them. Thanks again for asking. All right, so Activision, software company. Now let's take a look what's going on here, right? The general structure here, generally bullish, right? Okay, higher lows, higher highs, recent price action, corrective move. Okay, correcting the broader bullish trend. Now, what's going on in the more recent price action we have here? And by the way, I'm applying what you see me apply here in these streams is price action analysis, in case you're not sure what it's called. Now people think, and I want to clear something up, because people tend to think that price action just means I'm watching a price fluctuating. No, it's more than that. It's basically using information that comes straight from price itself. I'm not filtering price. I'm not using an oscillator that filters price, none of that stuff. All the information I use, whether it's Elliott wave, whether it's support and resistance, whatever it is, comes straight from price. So that is price action analysis, right? We're looking at price structures and we're comparing them to historical price structures. Now, what do we have here with Activision? So I have a higher low from maybe about a week ago, okay? Higher low, structure change. We took out the resistance. We have a higher high, and now we have this higher low attempt. Just the other day, what was that, Thursday? Bullish pin bar. So there's a buy signal in this thing. Now, and the structure could be changing. Now, maybe that makes sense going into holiday mode. Maybe they're expecting to, have some video game sales. Maybe they have a video game, a big one coming out. I don't know. I don't follow them. But here's the thing. As far as the chart goes, your buy signal was at 78.94. So basically you could say, what, 79? How much is this thing right now? It's just over 79. So if you're interested in this swing trade and something like that, the two things you have to ask is it, what is the risk? And is it within reason to at least justify the risk? And that you should always ask that question of any market you're looking at, okay? And if a trade setup is developing, first thing you want to know is, well, what do I have to risk? All right, as from a swing trade perspective. I'm not talking about day trades here. So the risk here is 76.68. So you're looking at basically 76.5, something like that. If you buy this thing at the candle buy price, which is, we can just round that to 79. So you're looking at what, $2.5 worth of risk, which isn't horrible. All right, maybe you want to give it a little more room. Maybe you want to take $3 worth of risk. I mean, theoretically, if this structure is going to remain bullish, it should not test this low over here, or it shouldn't break it anyway. What is that? 74.60. So you can also use that as a stop. Of course, that's going to, you're going to be exposed to more risk there, right? So you have to decide how you want to work with that. But the next question is, so about 2.5, maybe 4 points of risk, something like that, maximum. Can this thing push 2.5 points? Well, yeah, you're coming off of a low here, so you got some room to play with. Let's see what the resistance levels are. All right, just going back to some historical levels here. You have a resistance there. You have a resistance here. What about this area here? Okay, this one's broken, so that one we're not going to count that one. Even though price is kind of reacting to it a bit here, I would anticipate this thing to get cleared again if it cleared at one time. Now, if you're risking about $2.50, your first resistance is 85. So yeah, it's about 5 points, right? 5 points if you're buying it at basically 79, something like that, 5 or 6 points. So that's almost 3 to 1, right? So the reward risk makes sense on something like this, and it's within reason to get to that level. This is not out of reason, okay, this area here. So yeah, it's not bad. This would definitely be a good swing trade idea, okay? Like I said, though, the key to these is asking, what it should not do. And in this case, what it should not do, like I said, is take out this higher low support. Should not do that. So even if it fools around a bit, that's okay. Should not take out that support. That's when you have to make adjustments. The trade idea is really no longer in play there, unless of course you get like a swift reversal. Sometimes, it'll fake out, it'll fool around there, and the next thing you know, you get a bullish pin bar again. That doesn't really count as a break, right? It just faked everyone out. So just wanted to mention it. So anyway, thanks for asking. That's Activision. Okay, Cardano. So now, Peter, you say something interesting. Can you check ADA? Because I bought a little bit and I'm getting nervous. Peter, why are you getting nervous? No reason to get nervous. Maybe you're exaggerating. Okay, now, if you're being honest and you're getting nervous, then maybe you're too big, because you shouldn't be nervous, right? Because if you're nervous, you're basically a weak hand. You're admitting to the market you're a weak hand, and you don't want to be that. You want to be confident, right? You don't want it, because if you're nervous, you're likely to make the wrong decision. So this is your support on Cardano, and it's still range bound. So you bought a little bit. You bought like on this little green price action there, and now it's just kind of hesitating a bit. There's really nothing to worry about here yet, because the general trend is bullish, okay? And you've just been in this consolidation. All this garbage coin, I call it a garbage coin because most of these are just hype coins, but all it needs is some news or something, right? Or the YouTube thing starts and they all start saying you're going to be next millionaire by buying Cardano. All you need is one of those things or some kind of event, and it breaks vertical, right? Something like that. You're at least there's a possibility of that based on this structure, right? Because it hasn't broken the support yet. So I wouldn't worry about it yet. Now, you should worry, or you should take the loss, get out, if it takes out this low, which is what? 190. So if you see like 185, something like that, and it's closing weak, like you're not seeing a pin bar develop or something, or a tail develop, it's not faking out, then it's probably broken, and it's probably going to go lower at that point. Okay, so that's really where you should be taking the loss based on this structure if you're thinking of a swing trade. Otherwise, you took a chance with the buying near the bottom of the consolidation. Okay, that's okay with these as long as you know where to take the loss, right? If the structure breaks, because recently you could see the consolidation was a little higher, right? It was tighter up in here, and then you had this outside bar. That can happen with these things, and you could get another break. So that's what you have to watch out for. Otherwise, the general structure is bullish. So thanks for asking about Cardano. Hey, David. From Alicante, Spain. Mucho gusto. It's always good to see you. Okay, cool. SHIB. Talking about hype garbage coins. SHIB. Let's take a look. I saw a millionaire title on SHIB on YouTube. So that just goes to show. Again, and I think a lot of people know it's a hype coin. And I don't discourage, if you want to play the hype game, that's okay, right? There's nothing wrong with trying to make money. If everyone wants to pile into something, it's just you need to understand what can go wrong and not get stuck in hope mode, right? That's the key thing. So let's talk about SHIB. Definitely, structure is bullish. Okay, no problem. Bullish pin bar right here. All right, that's good. High or low. Now, took out the high of the pin bar. So there is a buy signal in SHIB. That's what the chart says. Now, the risk on this is going to be defined by this low right here. Well, it's basically the pin bar low. So what is that? 58, a bunch of zeros and then 5808. Okay, that's where your risk is defined from. And let's see, can this thing go to new highs? Well, that's going to depend on the hype. You know, we could do projections and stuff like that, but it's kind of pointless. It's really, what you need to do in this situation is focus on the risk. If you buy this thing now, and basically it's right, it's just sitting on that buy signal price, which is what? 6959 is the high, the previous high price. So if you're buying it there, what is that? You're risking what is that? The low here, I can't even see it. 58. So I guess that's a 1,000, whatever the unit is called. All right, so you have to figure out your risk based on that. And as long as price doesn't break that low, you should anticipate a further squeeze. Now, it's possible that price can fool around in this area a bit, okay? And that's fine. You can let it fool around because, you know, sometimes these things, they're a little slow to get their thing going. If you see something clear, like a bearish pin bar, like it attempts to break out, if you see, like, okay, you're in it, and you get a bearish pin bar up in here, that's really when you should make an adjustment. If you're in profit, take something off the table. Don't go into hope mode. That's the only thing I can say. Don't sit there and hope, oh, it'll get better. Oh, it'll just pull back. Oh, this is just noise. Oh, it'll blah, blah, blah. Don't rationalize like that. Make an adjustment. Either take a small gain, take a small loss, raise your stop, do something, because that's not how a breakout should look. A breakout should look like this, right? Like it broke out. That's what a breakout looks like that. So you see, notice there are no bearish pin bars. You have a pin bar, but never took out the low of the pin bar. See that in this candle over here? Then you get a bullish inside bar, and then it continues, right? That's what you should see. That's ideal. So you want to see something. It's probably not going to repeat exactly like this. Hold on a second. It's probably not going to repeat exactly. Oh, hold on. Computer here. Okay. So, but you get the idea. Okay. So that's SHIB. Again, very, very heavily hyped. Well, hold on a second. What is... Sorry. All right. So that's the situation with that. I hope that helps. But general structure is good. When the structure changes, then you should probably just stay away from it. And the first thing it has to do is break those supports, right? That would be the first thing. So that's how you have to treat something like that. Again, you have to spend a lot of time, you know, giving it attention, watching for those sell signals. That's why I don't like putting aggressive trades out there, because something like this requires a lot of babysitting. Theoretically, it should do one thing, unless it doesn't do it, which means, you know, the hype is over, or everyone's long and now there's no one left to buy type of thing. And that's likely to happen with this type of coin. But until that occurs, you might as well give it a try, right? If you understand the risk. Okay. Elizabeth, sitting on my hands, waiting for a sale. I mean, that's a good idea, Elizabeth. It's not an easy thing to do, to be patient and wait for better prices. But let me tell you, you know, patience pays. I know that may sound cheesy, but it really does. All this, if you're separating yourself from the hype and all the nonsense and being a millionaire tomorrow, which is what all these videos are basically telling people, then when things turn and all these people that are buying now are banging it out at the bottom, you'll have capital to be taking it off their hands. Just like right now, people, like even on something like SHIB, people that are buying this now, and again, it's not a bad thing, but what you're doing is you're taking it off the hands of the people that bought it at much lower prices. You're buying it after the fact. It doesn't mean that you can't make money. It just means that you have to take a lot more risk than the people that initially bought it. And you're doing them a favor. Okay? So that's why you're better off waiting for those adverse situations. That's when true opportunity exists, but it's not obvious. Okay, if SHIB, for example, I'm using SHIB as an example because the chart that we're looking at here is pure herd mentality. If SHIB turns to garbage, right, and SHIB starts pulling back and it pulls back 50% and blah, 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 right? You're going to have the initial people that come in and say, okay, buy the pullback, buy the pullback. If that breaks, they're going to give up at some point, right? And then you're not going to see any more videos about being millionaires on these things. And that's when they start to get hated like that, and they're, oh, these things are no good. Oh, these things are going to zero. When you start to see that kind of sentiment, that's usually when the opportunity is much better, okay? But it won't be obvious. Okay, so Mustafa, hey, good to see you. Okay, so let's take a look. VeChain, VET, USDT, let's take a look. So there's going to be coins in this situation, right? And they've been just gyrating around, if you notice. So people get focused in on this. They say, okay, look, green candles. Oh, it's going to break out. Okay, let's look at the location, because that's much more important, especially with these things, right? Unless there's some specific piece of news that comes out that can drive it and break this resistance, you're still buying near a resistance. And that's problematic. You could see the resistance had an effect about a week ago or whatever, but price is not selling off dramatically from there. So that's good and bad, right? So price is holding, it's not selling off. Usually a resistance is rejected quickly, and you can see it's recovered, right? It tried to reject quickly and it's going back. So that means no one's afraid, people are buying. That's what that means, right? There's no selling going on here. And you have a buy signal in this thing, right? You took out the previous day's high at, what is that, 1355, basically. Now, if you want to get involved, understand you're playing the breakout. That's what you'd be playing here, which is not a bad, it's a valid strategy. Just understand what can go wrong and what is the risk. So just like the other one we looked at, what, Cardano, this thing is at 1260 is your risk. This thing right now is at 1370. So you're looking at like I guess a cent of risk. You know, obviously you would have to adjust depending on what kind of size you'd be taking on something like that. But I'm looking at this from a swing trade perspective. As far as inventory and investing, these are not good levels. Okay, these are generally, I mean, just to put it into perspective, VeChain was much higher, right? 6 months ago or whatever, longer than that. As you can see, VeChain is kind of stuck in this consolidation. If this turns out to be a range high, and people that are investing here are going to have to take some pain, right? If this thing goes back to the middle of the range or the low of the range. Those would be much more attractive levels for inventory if you want to play that game with these coins. I don't like long-term inventory for these coins, right? These are junk coins. They're not really proven. And in the future, some of them may become something, but there's no way to know that now. So if you're going to tie up money for the long term, I'm talking about like a larger amount. If you're playing the small game, you want to build up a couple of $1,000s worth or whatever, okay, fine. As long as that's a small percentage of your portfolio. But real investing is not this. Okay, as far as you know, the word here, I'm gonna throw a word out that I've been noticing. A lot of these fake gurus saying blue chip. These are blue chip altcoins. Do you realize they're implying that an altcoin, something extremely high risk and speculative, and they're conveying this idea that it's a blue chip altcoin. It's a good one. Blue chip is like IBM. Blue chip is like Walmart. Blue chip is like Intel or Microsoft, right? That's blue chip. Something that pays dividends and that's generally stable, okay? That's a blue chip stock. There's no such thing as a blue chip coin. Where do they come up with this nonsense? Oh, you have to be a millennial to believe that an altcoin is a blue chip. Anyway, that's my rant for today. I just had to mention that because I think it's ridiculous. So my point is, if these things all pull back, they're all going to pull back together. And if you want to start accumulating them, wait for better prices. Like Elizabeth said, she's sitting on her hands. That's really a good idea for inventory. Okay, you want to play the swing trade game. You want to go for the breakout. You know your risk. It's likely to, it could break out, right? You have some structure behind you here. You're going to need a leader, maybe Bitcoin, or maybe some news comes out in this thing, and then you're going to have to work with it from there. You do have some resistance levels going up into these higher levels, so you have to keep an eye on that. So that's basically the argument from both sides of this thing. All right, so at least they're not pushing sell signals yet. All right, anyway, so best target, you want to know best target to take profit? Well, here, we can use some of this information back here. I would say a good place to start would be this level right here. Okay, which is what, 18, and basically 1860, yeah, around 1860, around there. That would be a good place to start because that's an old resistance, right? I'm sorry, an old support, which is likely to turn into a new resistance up in that area. See this area right here? People fail to go back and look at these important points on a chart, but they can give you some very valuable levels, right? Whether it's for a target or whatever. All right, anyway, so that's VeChain. Man, I'm slow today. All right, let me see what you have. Jose Rubio from Spain. Mallorca, all these nice places. Hey, mucho gusto. Thanks for stopping by. All right, Chainlink. Jose wants to see Chainlink. Let's take a look. All right, so Chainlink, again, I think I saw another hype video on, I think Chainlink is going to make millionaires too. I remember seeing something about this. Anyway, so here's the thing. Like VeChain, notice the similarity, right? Notice, I'm just going to zoom out a bit. Notice, right? VeChain had a similar situation. Okay, Cardano had a similar situation as well. All these coins are doing the same thing. Everyone's grasping at the obvious. So those are your resistance levels on something like Chainlink. Now, is Chainlink going to 10x and all this other nonsense? Well, here's the thing. You have some bullish structure going with you here, okay? Just looking at this from an objective charting point of view. You have higher lows. You have a higher low over here with a followed, what is this here? You have a buy signal in play at, what, 30.68 is the previous high. So from 30.68, you know, is a buy signal. Risk, similar to those other coins, can be defined from 28.61. So you're looking at a couple of points. Maybe you want to max it like at 3 points of risk, something like that. And this thing's going to have to justify and make 3 points for you, right? To justify that risk. Can it do that? Well, your first resistance is here at 33.91, 34. So just barely. I mean, you just barely get 1-to-1 on something like this. Of course, you're going to need a lot of optimism to get you through this over here, right? And going into this resistance zone. So that's, again, it's an aggressive swing trade for that reason, because can it get through this resistance reasonably? Theoretically, it's got some room, but what are you up against, right? You're up against this potential double top situation, and if anything goes wrong, you know, it's all going to turn right there, right? So you have to be careful of that. It's all about how much risk you want to take. And you want basically bet, okay, I'm going to go for the breakout. I'm going to bet that it's going to break out. And then you have to follow it from there and see if it gives you a sell signal right away or if there's some follow through, and adjust as you go. But you do have the bullish signs with you, at least for now. But it can turn, as you know, it can turn quickly. So you have to decide how you want to manage something like that. But at least you can say, okay, look, 3 points of risk. And whenever you know your risk, that's really where you should be estimating your targets. You know, target 1, 3 points higher, target 2, 6 points higher. That would be 2-to-1, that kind of thing. And then you look on your chart and you see what's going on around those areas to see if that's within reason, or are people likely to start selling earlier. How do you know? Well, if there's an old resistance there, an old support like this, old support, likely new resistance, there's probably a good chance that people are going to start selling earlier, right, in this area here. There's a reason for that. That's because people are long from there and they're happy to get out for break even. That's a phenomenon. It happens all the time. So just be cognizant of that if you want to take that type of trade. I mean, personally, for me, I wouldn't take these swing trades. I don't like swing trading these coins. There's just better things out there that I think that are you know, easier to move. These things, as you can see, when they sit around for a while, they do a lot of nonsense, right? And they're a pain. They're a pain to watch. So that's going to depend on you know, your attention span and all that stuff. Anyway, so that's Chainlink. Thanks for asking. Hey, Susan, can we take a look at FIL? Sure. FIL. All right, again, I appreciate everyone's patience today. I know I'm a little slow. I'm just talking too much. All right, FIL. What's going on here? First, we want to see the bigger picture, right? So general structure isn't bad. It had that nice full correction, and now it's had this initial bullish move. I guess this is basically the Bitcoin pattern, followed up Bitcoin up until where it is now. So since then, let's take a look at the more recent price action. You have this right here is a consolidation type of move, right? Okay, so you have a range low defined. This is your range low. and you've pushed off of that. All right, fine. So there's something like this. I would not be too interested in buying like in the middle of that range right there. You're basically looking at the middle of the consolidation. So you're better off, in my opinion, waiting for another test of the range low if you're interested in a long. If you're long now, there's nothing to do. Just let it, let it just play out and see where it goes, because you're at the midpoint here, and midpoints are they're highly random. So anything can happen. It can work its way higher, it can pull back, right? Anything can happen here. There's just absolutely no way of knowing which way it wants to go, all that kind of stuff. No advantage. It's 50-50, you could flip a coin, right? So let it pull back, see if you get a buy signal there. That would be ideal. If it breaks that support, you don't want to see that. Okay, so that would call for adjustment, perhaps getting out, perhaps taking a loss, but that's your point of reference for that. And when I mean break, I mean it's got to break and close below, not just touch it and then turn around. So that's why you have to watch these things, and you don't want to react. You want to wait till candles close. Okay, or you have a stop in place and you get stopped out, and that's that. But you should have a fixed stop if it's a swing trade. So that's how I would treat something like that. Maybe you get like a mini high or low along the way, but again, just keep in mind, this is not in a trend right now. It's consolidating. So maybe at some point it breaks out. You're trying to get it early before the breakout, right? I mean, I'm guessing if you're thinking long, and maybe you get something like that after a high or low. Another more conservative thing you can do is let it break higher, and then look for the higher low. I mean, it'd have to take out this level here, which is what, 30, what is that? I'm sorry, 80, 64, that area up there. It'd have to work its way up here and then pull back, right? That kind of thing. You could wait for that. Or if you're just taking like a vertical break, you're going to have to define your risk from like the whatever the range low is at that point, or if there's a higher low in place, and then work with that. All right, we see stuff like that all the time. Let me just give you an example. And maybe someone asked about this, but let me just give you an example. ASX, which is one of these NFT millionaire maker coins. You're going to be a millionaire. Just buy some AXS right at the top. Okay, so this thing, I'm bringing this up because this is a good example of a range breakout. Okay, range breakout. All the YouTubers come out, buy this thing. It's going to 10x, blah, 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 right? I'm sure you're getting tired of hearing me say that. And you have all that, and look what it does, right? It fails. So this is what I'm talking about when you have to make an adjustment. This right here, you see this, what I'm highlighting? When your coin breaks out, after you buy a breakout, that is what you should not see. This is not momentum continuation. Those are tails. Someone selling everything. Someone is selling a lot of stuff here. And all you're doing by buying it is taking it off their hands. Thank you so much. Okay, and you're just assuming the risk while they give it to you. Very happy to sell it here. If these things are really going to 10x or 100x or whatever nonsense they're coming up with, why would anyone sell? Right? But obviously there was plenty of orders here. Okay, so that's what I mean. That's what you have to watch out for. If you bought the top of this, you should be out of it now. Yeah, it's trying to recover a bit, but you shouldn't take the risk. And that's all that matters. Maybe another buy signal develops. Maybe this pin bar closes like this, the bullish pin bar. Maybe you get a high, break of the high. That would be an aggressive buy signal. Better than buying the top if you want to take something like that, okay? But if this fake out continues, you're looking back at the range low. These things, they stop out like that. You need to be able to take those losses. Otherwise, you expose yourself to much bigger risk. And that's what will ruin your account. If this thing breaks this over here, that's bad. Okay? And people go into hope mode. They hold on to it. Oh, it'll come back. It'll come back. Oh, my favorite guru. Oh, the guy in the chat room told me, blah, 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 blah. And it goes to zero. Or, I'm exaggerating, but you get the idea. Okay, anyway. So thanks for asking. Let's see what we got here. Gotham. Okay, again, thanks for the coins. XPEV. Okay. Okay, let's take a look. Oh, I guess that's French there? Okay, I guess that's French. Okay, cool. I don't speak any French. I think I know a bad word or two. All right, so Xpeng, let's take a look. Xpeng Incorporated. It's a stock. We have here, this is a great example of a nice like double or triple bottom situation. Look at that. And then look at the rally off of that. That's nice. Okay, great. But we're not in that situation now. So what's going on here? You took out this resistance. That's good. Now you're fooling around up in this area here. Now, are these all-time highs? No, they're not. All right, so let's go back further and see what kind of levels you're dealing with here. So you have this level here, and you have, let's see, you have this around here, and then you have something up in this area right here, right? So those are your resistance levels. Great recent structure, nice broad higher low, going for the higher high. This is not the place to buy it though. This is the place to get out of some if you have some. Now, nice candle today where it gapped, but it closed red, if this is like an accurate chart here. And notice you're closing red, or this thing's closed, yeah, closed, into this resistance, right? So I wouldn't buy this breakout. There's too much trouble here, especially after the length, the magnitude of this move, right? You're just asking for trouble. So what do you do in this situation? If you have some, like I said, unload some. You don't have to unload the whole thing just because this is possibly faking out, because you do have a nice structure behind you here. But if you don't have some, then, and you want to buy some for a swing trade, then you should look for this level right here, right? That area right there, which is what, 43.89? So around 44. That's maybe 4 points away, something around there, 3.5, 4 points. That would be your area of interest, looking for basically a nice little higher low to develop. Like I said, with all that drama we have coming out this week, FOMC and NFP, it's possible maybe this thing gives you that pullback, right, over the next few days. That's the place you want to look for it. And of course, you want to see some sort of price confirmation develop there. Don't just step in front of it, because it's possible that you can get like a symmetrical version of this move here where it just gives it all back, right? You don't want to get stuck in something like that. It's possible. So just something to keep in mind. That's why, again, it's so important to focus on risk first. First, define the risk, and if the market taps you out because it doesn't agree with your idea, take the loss. Okay, I can't emphasize that enough, especially in light of where the NASDAQ and S&P are. Now, I guess this is a Chinese stock, so I don't know. It's probably not super highly correlated. I don't know what their industry is, though. Okay, anyway, so thanks for asking, Gotham, and again, thanks for the coins. All right, hey, David, good to see you. Elizabeth, okay, Ethereum. How can I not go over Ethereum with Elizabeth here? All right, so let's take a look at Ethereum. Is this my chart? Let's see. Yeah, that's the chart. Okay, so Ethereum has been resilient. I'll give it that. All right, higher lows, higher highs. I think we've talked about that 4,000 area, Elizabeth, right? We talked about that previously. And what's the high here? 43.74. This thing's currently at 43.53, right? It's been as high as 44.61. I mean, nice sustained move off of that 4K area. So it's still strong. There's no reason to sell this thing yet. There's a new buy signal developing now. You have this bullish pin bar today. You have a bullish pin bar yesterday, okay, with the tail on the bottom there. The high is 43.95, so basically 44, pushing 44. Is that the high yesterday? 43.95. Today's high is 43.85. Okay, so this thing starts pushing 44. You have your new buy signal. Okay, risk for a swing trade can be defined at 41.51. So what is that? A couple 100 points, 300 points, something like that. Those are all-time highs if it can do it. So you have to be willing to take the chance that this structure follows through. What you don't want to see if you take such a trade is, for one, this support, this higher low, should not get taken out. But if you want to go into some little hope mode thing because it's a minor support, okay, fine, I'll give you that. This support should definitely not get taken out, okay, if this thing is going to remain strong. So what is that, 42.66? So basically 42 half or 42 even. If price goes there, then this market's probably pulling back more significantly. That's the way you can judge something like this. Other than that, if you're in some, hey, let it ride, right? There's definitely no sell signal here yet. And just because a lot of people get very bearish at these highs, I understand. I don't like buying highs either. It is in a vulnerable area, and anything can happen. This thing can turn. Some news comes out, whatever, this and that. But based on this structure, theoretically, it should push higher. We don't know how much higher. Another thing is, I know I had performed a quick projection on this one on my previous stream, and I know 45 was like a level that stood out. So watch the 45 area. If it gets up there, watch that area for like a bearish pin bar. And that would be a good time to unload some more if you have some. Doesn't mean it's going to have a dramatic pullback, but it does tell you that a sell signal is likely to develop next. And hey, why not take something off the table if it's going to go lower, right? So those are the levels I'd keep in mind, but not a whole lot to worry about here with Ethereum. Just, you know, it's at a high and you have to watch for that turn if it comes. All right, thanks for asking about Ethereum. Hey, okay, good to see you, Schwartz. Like I said before, let's see what we have here. I'm just going through the chat, just running through the chat here. Man, I'm still at the beginning of the chat. Dogecoin. All right, let's take a look at Dogecoin, however you say it. All right, now, again, big hype meme coin like SHIB, okay, like Shiba, whatever. Same idea. So here's the thing. So like that Ethereum example that I just told you about, this is what you don't want to see on Ethereum. Something like this. Okay, look at that pin bar off of a resistance. Not a good sign because everyone is selling. Obviously, a lot of sell orders came in there. So it's trying to give you a buy signal here after the sell signal. You have a bullish sort of, that's not really a pin bar, but you get the idea. It's got a longer tail on it, and it's trying to take out that long tail candle high, which would be a new buy signal. You have a somewhat bullish structure here, but this is a problem, okay? Because that's a double top. That's a broad double top, and yeah, this thing is generally, we can argue that the general trend is generally bullish, and this thing has just been consolidating. So if you buy into a buy signal near the range high, you're fooling around with the range high. So people are likely to sell here, and if there's any little ounce of like some kind of bearish catalyst, you're buying at a really bad price, right? Like the risk is really high, and this thing's going to have to work hard probably to get to any reasonable resistance or price target. That would be this area right here. What is this? 43 cents would be like your next area. So if you're buying this thing at 27, let's say 27 and a half cents or something like that, yeah, it's possible. You'd have to risk about 7, 8, maybe 10 cents if you want to give it some room. It's possible to make that 10 cents. You're just going to need this thing to really go your way because you're fighting this resistance, this double top resistance, okay? And these coins really depend on a lot of hype and stuff, so you're really going to need something to come out to get this thing going, right? Otherwise, you're just looking at a double top and a likely support break. So if you want to give it a try, look, again, these things are highly random, and that's part of the game, right? You take a risk and see if the market wants to go your way or not. But when the market says no, then what you will see are supports taken out, which is something that it should not do if it's going to go higher. The support in this case would be that 21 cent area, right? Just like Ethereum, like I pointed out with Ethereum, same idea. If it takes out that more significant support, then it's probably going back to the range low or possibly lower. That's where you need to make an adjustment, meaning you have to take your loss, something, okay? Tighten a stop, get out of whatever, and I'm talking from the swing trade perspective. If you have a bunch of inventory, well, you should be locking something in anyway near these resistance levels anyway, and then you try to let some ride, you know, based on that. And if it starts breaking supports, you should probably take a little more off the table because something that's strong shouldn't do that unless you don't care if it goes to zero, and then you have nothing to worry about, right? That's a truly strong hand. Anyway, thanks for asking about Dogecoin. All right, Kai. All right, let's see what else we got here. Okay, ZIL. Let's see, ZILUSDT. What's going on here with ZIL? So this, again, I'm seeing a lot of these charts are looking similar, right? Looks like VeChain, looks like Cardano. Same idea. They have these range high consolidations after some kind of corrective move, right? There was some sort of pullback, some sort of rally, and it's trying to rally again. We have a higher low over here. What is that? 9 cents, just over 9 cents, this area right here. And it's trying to break higher. But again, you are fighting resistance, a lot of resistance in here, and look at this, pin bar, okay? This long tail is not a sign of breakout or momentum follow through. That's, hey, let's sell this thing, all right? Unload onto all these people who don't know any better. That's what that is. I don't like that at all. So in this type of situation, if you're interested in a long, maybe you have some and maybe you want to get out of some, this wouldn't be a bad area to get out of some. But as far as new longs go, you need to see some sort of support, and that's your support right now. Because again, this thing is not exactly in trend mode. It's in consolidation. So you can see, it's possible to see a range low get tested again. And what is that? Basically just over 9.5 cents, something like that. That area right there. And again, if these things go out of favor, because the altcoins, everyone says, we're in altcoin season. Okay, all the fake gurus, let's all say it at the same time. If they go out of season, you're going to see all these supports start breaking. And you're going to see coins like this, and VeChain and Cardano, you're going to see them all break this support right here. And I wouldn't be surprised if Ethereum does a similar thing, because I mean they're probably all taking their lead from Ethereum. I'm willing to bet, because Bitcoin too, but Bitcoin's been kind of, it's sometimes Ethereum can take the lead, right? It's between those two. So anyway, that's what I'd watch for. Those are like the warning points. Otherwise, wait for a pullback to a support, possible high or low if you want to take a chance. This is not the best location to take a chance. You're looking at a possible false breakout there, okay? So thanks for asking about ZIL. Let's see, so Mustafa, can we say that Bitcoin formed a double bottom? And this is the case, do you think we'll have a better... Okay, so Mustafa, you mentioned the Bitcoin double bottom. It's not a double bottom yet. I would like to see one. That would be nice. You have a single bottom, because this is the bottom right here. This is the bottom that I'm referring to. This price action back here is not going to count, right? As far as a double bottom, this is not relevant back here. So this is bottom number 1, and I want to see bottom number 2. It's got to go into the same price area. This low here, 59.5, is not low enough. That's not. It's a higher low, which is also typically a sign of strength. But the thing is, higher lows are more relevant when we're clearly trending. This is not clearly trending, it's consolidating. So that's why I can't really put a lot of emphasis into the higher low. Like I said before, and I wrote in my article, if you're willing to take the risk on that buy signal, then you can try to play that higher low game. But I like to assign probabilities to these things, and I would give it a lower probability relative to if it gave us a double bottom here. Okay? So again, the probabilities that I assign are anecdotal. I can't give them a precise, I can't use a calculator and say, look, this has a 53.5% chance of blah, blah, blah. I can't do that. So I have to kind of assign a probability based on like a loose idea of what I think, what I think it can do or not. It's almost like when you're playing poker and you have to put a player on a hand, right? If so, I think this guy's got aces based on the way he's betting. He may not have aces, but whatever, right? Or he may have kings, or he may have queens, or whatever, based on what's on the board and based on his behavior and how he's betting, right? It's like, so you're putting a hand on a player. It's the same idea, right? When I like to assign those loose probabilities. Anyway, okay, so thanks for asking about that Bitcoin question. So yeah, I think we can get a better place. HS, okay, Theta. Let's take a look at Theta. Haven't looked at that one in a little while, but okay, not too surprising here. It looks like a lot of these other altcoins. You notice they kind of move together, right? So we have this attempt at a breakout, and it reversed. See those red candles? And again, we just saw a bunch of coins that look very similar to this. So what does that tell me? That tells me that we're still in a consolidation. I think we can get better prices. Just zooming out, all of these coins, right, they have bullish structures. We had that initial leg back here, corrected, and since that corrective move, it's been consolidating. We have this higher low, but where's the higher high? We're not getting that higher high nice and easily, as we can see. We're getting a lot of noise, okay? All these red candles here and then this one. So that just tells me that we're not in a trend right now. We're just consolidating. So, okay, fine, no problem. It doesn't mean we're bearish, but it means that you could probably get better prices if you're willing to wait, okay? And if you're not willing to wait and this thing starts to break out, you have to decide if it does something like this on the next candle, which is possible. You have to be willing, or you have to decide to take that risk or not. Okay, this is going to be much higher risk because, as you can see, something like this over here, I would have told you the same thing. Breaking out, but it should continue to follow through. It should not give you a massive red candle like it showed us over here. That's what it should not do. So you have to make adjustments if you see that type of situation. You have to expect the same type of behavior here. Okay, you have to be prepared for it. So if you want to go for the breakout in that situation, then understand that you may get something like this, okay? And you have to adjust to that. Otherwise, you will lose more. Otherwise, you know, if it goes your way, hey, it goes your way. That's what you want to see. Otherwise, I think it's just easier and a better probability type of trade if you wait for these support levels, okay? $5.69. What's this over here? $4.65. Those would be levels to keep in mind. Like I said before, in this type of environment, you want to, a lot of times it's better to just sit back and plan. So, oh yeah, I'd love to get that price. So you put it in your watch list, you put the price in your whatever, in your thing, and price gets back there and you get a message. Oh, look, price is there. Oh, all I had to do was wait a week and not look at it, right? So that's, and then at that point, you can look for confirmation if it's a swing trade, or if you're thinking bigger picture, maybe you take a small bite. That's going to depend on you. But anyway, that's the situation with these. Okay? If I had just bought that and I saw that red candle, I wouldn't be too happy about that. And I would have to adjust, either raise my stop, take a small loss, right? You get the idea. All right. Thanks for asking about theta. Okay. Okay, cool. No problem. Hey, Jenny, good to see you. Hope you're okay. Cool. Your feedbacks are much. Okay, I appreciate that. Thank you. Schwartz, what's up with AR? Okay, let's take a look. Schwartz, AR, USDT. What? So look, same situation. They're all trying to break out. Again, there's a lot of hype. Like I said, there are dozens of millionaire videos on YouTube. I guess everyone thinks they're going to be a millionaire with these things. There are all these attempted breakouts, but this is consolidation. There's nothing going on here, is what that is. So when you get a breakout attempt just like this, and I pointed out with AXS as well, you get something like that, and then this follows, and this candle closes red, that's not what you want to see. So if the current candle low gets taken out, that actually becomes a new sell signal. Should you sell it? Well, I wouldn't short these things, first of all, right? These are not bear markets we're looking at, but it's possible that you're going to go retest this support level. Right, that's what I'd be watching for. That's the point of reference, 44.51. That's your point of reference, Schwartz, for something like this. Now, if it breaks 44.51, what does that mean? Does that mean we're bearish? No. It means you're likely to test even the lower part of the range. This whole thing, right, from, what's this low over here? 38.04 to this high over here. What is that? 60? That's a range. That's a consolidation. And right now you're sort of near the middle of it, so price is going to be very random in this range. You want areas where price is likely to be less random. That would be here. All right, so that's why it really pays to wait for these, especially when they do these false breakout type of things. And if you're noticing a lot of hype and a lot of videos and millionaire, like I'm noticing, you know, I'm not that surprised to see them faking out. It's just a lot of nonsense. It's just a lot of noise. And like I said before, if you want to go for the breakout, just understand what you're dealing with, okay? And understand how you have to adjust. So anyway, thanks for asking, Schwartz. Let me see what else we got. Erhan, hey, good to see you. From Turkey. Oh yeah, well, people mentioned their countries, which is nice. I forgot to mention that earlier. I mean, the stream is practically over here, and I forgot to mention it. If you want to mention what country you're from, that's always nice to hear. Okay, so let me see here. Let me just go back to the question. Reef, R-E-E-F. Let me put that in here. REEF USDT. Oh, okay. Good example. Nice example of a breakout. All right, so here we go. Let's look back here. Let's look back. How much is this thing? Okay, so it's sub a penny. Okay, it's like a fraction of a penny. All right, fine. So let's take a look at some levels. You have a resistance right in this area right here, right? It's an old range. You see the old consolidation? Those levels are going to affect you as this thing goes forward. Now, with that being said, we have a higher low over here. So those are all generally good. You have a higher low back here. So general structure, higher lows, and it's making the higher high. So what do you do now? And it's going into a pretty significant resistance zone. This entire zone is going to be, as we can see back here, right? You see this consolidation? It's going to probably have an effect on this thing. So the midpoint of this zone is probably going to be the worst place to buy it. All right, and look how close it got to the midpoint of that zone. You see that? So what do you do now? Well, if you want to go for the breakout, which again, you're taking a lot of risk there based on the location, that, you know, the characteristics of the location. You're looking at risking, what is that, 0285, this level right here. That's where risk will be defined from. So if price goes back there, that's where you should probably take the loss. If you want to give it some more room, like we talked about with some of those other coins, like Ethereum and whatever, Cardano, 0250, that's where price should not go if this structure is going to stay intact. So if you buy this now and it goes there, you should take the loss. Okay? I mean, it sucks, but that's not how the market should behave after you buy it. It may take a week to get there. There's something to keep in mind. I'm just trying to give you some perspective. That's the breakout idea. But really, when you're taking these breakouts, you really should take the loss as soon as possible, and that would be 0285. Okay, that would be this low right here, this low area right here. And then what you need to happen here is the next candle needs to be green, and you need to see some green candles. And you need to be able to justify your risk. And it's going to be tough in this area, because you have a lot of resistance ahead of you. So this is probably not the best choice for a swing trade, but you do have a buy signal and you do have a higher high. Just don't be misled by, you know, just the chart alone. The chart structure is okay, but look at the area you're going into. That's an important consideration, because if you're going to take a risk, you have to be able to justify a risk. So for something like this, if you can get away with 1-to-1, that's probably pretty good. Okay? Don't be fooled by just like one single vertical candle. I would be anticipating this thing having problematic candles, you know, over the next few days because of that location. All right, so thanks for asking about Reef, and thanks for pointing it out. It's one I certainly don't follow. Let's see what else we got here. Okay, Hussein. Good. What are your thoughts on CEI? Is CEI a stock? Let's find out. Possibly. Or let me see. Is there a coin called CEI? Let me just put it in. No. Okay, so it's a stock. Okay, cool. Let's take a look. So this looks like a hype stock, clearly, like some of these recent ones. By the way, hype stock, GME. Look at GME. What a nice little break there. That kind of reminds me of that. All right, I didn't mean to change the subject. But all right, so back to CEI. What do I think of it? You have a consolidation in this area right here. And I'll tell you what I don't like. I don't like this steepness of this type of pullback. I don't like that. That means it's pure hype, number one. Number two, you have a lower high over here. Okay, and the structure, so the structure, while it's corrective, you're now competing with this lower high. You have a support area right here. And now, so we can argue both sides. We can say, well, the general structure is bullish, right? Because nice big higher high. But this pullback, that magnitude of pullback takes away that credibility. Because why did it pull back like that? Okay, that's not good, okay? Which means, and now you're testing this support. So as far as like longs go, I wouldn't be very interested in something like this. This is not like a solid, clean-cut, bullish trend. If you want to get involved as a long because you like the potential higher low, I can understand that, but wait for a better candle. Okay, how much is this thing? $1.21? Okay, it's cheap. So you can wait for a better candle, or at least wait for one of these little mini highs to get taken out, $1.35, something. Or if you want to be more conservative, let this lower high get taken out first. This over here, what is that? $1.92, basically going into $2, because at least that would tell you that there's a structural change taking place. Right now, you don't have that. You have test of low. Now, if you want to wait for maybe a bullish pin bar, that's at least a little bit better than what you have here. Okay, so you have a good level. There's just no reason to buy at the moment. Okay, if this thing breaks the support, you're likely to test lower levels. And keep in mind, when something looks obvious like this, they're all buying the supports, and it breaks, you're gonna have a bunch of people banging this thing out. Okay, just something to keep in mind. So thanks for asking about CEI. All right, let's see what else we got here. Okay, I'm just going back to the chat, Hey, Bart, good to see you from Uruguay. Mucho gusto. Can you take a look at Phil? Is that the same as Phil USD, or is that a stock? Maybe if you want to be more specific, can you be more specific on Phil? Let's see. Phil caught my attention today. Looking good after China. Okay, hold on. So let me just see. Is Phil, because Phil is a coin too. No, so they must be talking about the stock. Okay. So let's go back here. Let's take a look at Phil. I'm assuming you guys mean the stock. So talking about sell-off. All right, I see the pin bar. Okay, something about China. Okay, fine. So here's the thing. Nice recent price action. Look at the consolidation breakout, right? I mean, this is nice. This is all nice over here. As far as pulling back, okay, good. You want to see a pullback. That's all good. As far as the current candle, that's a bearish pin bar. Started off good, gave it back. So what does that mean? That means you're likely to get a sell signal or a break of this low over the next few days. So you're better off waiting. Nothing to do here, but you do have a location of interest. This is an old resistance. Okay, notice it's an old resistance. That's not a coincidence. Notice it kind of stopped at the old resistance. Notice a few days ago, you had, Friday, you had a bullish pin bar off of the old resistance. So you do have that area. So keep an eye on that. If you get another bullish pin bar, which is very possible over the next few days, that would be a good place to go long. Now, I guess they're mining, so I don't know if that's gold mining or whatever kind of mining that they do. But so you may be playing gold or silver here. So just something to keep in mind. We have some dollar-sensitive news coming out this week, and you don't want to. It might be a good idea to wait and to see how the dollar behaves over the next few days, because strong dollar may knock the wind out of this, right? Further. So just something to keep in mind. But if you get the buy signal and you want to go for it, you could be able to measure your risk, right? Wait for that pin bar, wait for an inside bar, something like that. So you have that area. If that support is taken out, you're looking at this area, right? That's your next support that you'd have to watch for, which can take, some time to get to, okay? And that would be what? Around $8, just over like over $8.50 area, something like that. All right, does that make sense? So thanks for asking about Philo mining. Certainly one that hasn't been on my radar either. So good one for the radar. Let me see what else we got here. All right, so just going back here, that was FIL. Shervin from Vancouver. Hey, good to see you. Bart, what about Twitter? Twitter for a long, TWTR. Let's take a look. TWTR. So, Twitter, here's the thing with Twitter. I mean, Twitter, I guess they didn't have a good company report or something. I mean, look at that bearish candle. Twitter's been in this consolidation. I can understand why you'd be interested in a long. Now look at this back here. You have an old resistance, which sort of became a support, not really, right? You had this little situation right here, and it's pulled back into the area. So what you have here, and you also have a broken support. Look at this. So that's not good, okay? You don't want to see a broken support when you have a consolidation like this. So in this type of situation, here's what I would say. Wait for stability. Unless you're investing and you're thinking bigger picture, well, of course, you can buy at any price and you have a lower price here, which isn't bad. But if you're looking for more of a swing trade, I think you mentioned here. Did you mention swing trade? Let me see. Or just long. I think it'd be wise to just wait for some price stability, not just a single candle here. So what you want to see maybe is an inside bar develop, or maybe like a little mini double bottom in this area over the next few days. Keep in mind, Twitter is, you know, they can have political things going on with it and all kinds of other stuff. So just be careful with that. But yeah, I would wait for more stability before getting involved. If you want to be, if you want to be aggressive with it, because I can understand the price, well then the first thing you should look at is the risk, right? And what it should not do. And what it should not do is go below 53.5 or 53.46 is the low. Twitter should not go below this low. That's what it should not do. So if it does that and you're in it, that's where you need to consider taking a loss because it's not behaving as it should. That's why I think it's better to just let it fluctuate a bit and let it give you a more definite level. All right, if that makes sense. Because look back here. It should not have broken this double bottom, and it cleaned right through it like it wasn't even there. So that may act as a resistance now. Okay, I mean, theoretically it should. So just something to keep in mind. Anyway, thanks for asking about Twitter. A lot of things you can learn from that. Okay, Shervin, can you please go over Facebook stock? And okay, let's take a look. So Facebook, I know a lot of drama with Facebook and blah, blah, blah. Facebook is obviously part of the FANG. And look, failed low on Facebook. I check out Facebook all the time because it is a leader, right? And it can affect things. So you have this push off that failed low. If you're not in Facebook from the failed low, I wouldn't chase it now. This is a market stock, and it can be affected by things over the next few days. Also, you're going into this gap. Look at this gap area right here. I don't know if that's like just a bad price print on the chart or if that's a real gap. But if that's a real gap, that's likely to act as a resistance as well. So I wouldn't touch this thing now. What you want to wait for on something like Facebook, which you may see over the next few days, because again, I wouldn't be bearish on this. The general trend has been bullish, right? The general trend of the stock market has been bullish. Just wait, see if you get the higher low or the double bottom. That at least, if you get the double bottom or the higher low, something like that in these areas here, at least you know that you're not getting caught in a further corrective type of move if people are willing to step in at those prices. So just something to keep in mind there, because this move, the movement that it's in right now, is still part of a corrective structure. In order to change that, it needs to take out this high right here, which is what? 343.78 needs to take that out, and it hasn't done it yet. So that's why this is not the best area to get involved now, especially when you look at something like this, like I showed before, FANG, FAANG, right? The FANG group right here. You can use this kind of like as your guide for Facebook too. Look at the FANG group. Shouldn't be red, right? This thing should be green. So if this thing pulls back, Facebook will probably pull back too, since Facebook is the F in the FANG. Okay, anyway. So thanks for mentioning that. Now he mentions DM. Let's take a look. What's that? Is this the right? Oh no, data metrics. Okay, let's see. Thanks for being specific. So that's on a different exchange here. Okay. Oh man. All right. So how much is this thing? 17 cents. What currency is this thing in? Canadian. All right, so here's the thing. You do have a higher low consolidation. All right, I like that. Higher low consolidation. I mean, look at this price action. It's this recent price action. It's very like when you see this, it means it's just not moving at all. When you see like all this type of candle stuff going on here, it's a mess, right? But anyway, it's a higher low consolidation. So in a situation like this, you have a level here. You have a level up here, clearly, and you have a level here. It's a higher low, so you should be anticipating a breakout, a bullish breakout. In a situation like this, because it's such a cheap market or whatever, you might as well wait for like a breakout. And you can put your risk, you can define your risk from this area right here. So if it breaks out, it really should not go to that low again. And you have all this area in here for profit targets, right? So you need to be able to justify your risk in there, and a midpoint is a good point of reference, something like there. So I think that justifies the risk. If you're buying this thing on this breakout here, and you are putting your stop here. All right, I think you could do better than 1 to 1 if price can get back into this area here. That's what you're playing in this type of situation. Okay, so you see those levels? That's what you're dealing with. So not bad, but it looks like the way it's moving, it looks like you're going to have to, definitely be patient with as far as how long it takes to do it. It may take a couple of weeks or something like that. All right, so thanks for asking about that one. All right, let me see what else I got here. So, hey, Sean, good to see you. AMC, all right, AMC, of course, Sean. Sean's a longtime customer. All right, so AMC kind of looks like what? GME, that GME situation. Nice consolidation. Look at this. So what I like about these coins, might as well be a coin. What I like about these stocks is these are like the do your own thing type of stock, right? They depend on hype and news rather than the S&P. So that's what I like about something like this. If you want to take the chance, you're looking for basically the consolidation breakout early. That's really what you're doing. And you can define your risk by this level here, 34.86. So maybe 34.5. How much is this thing right now? 35.40. So about $1 of risk, which isn't bad. Okay, and if this thing can run at least $1, what are you looking at? If you get a breakout attempt, and we took a look at GME earlier, right? And it was trying to break out. Again, these are going to depend on hype and when they get on the day trader radar and they all start piling in. 48.28 is this area here. So you have some room, Sean, to play. There's some room here. Okay, so that's good, and you don't have to take a lot of risk. And the other thing I like about it, like I said, it's not highly correlated to the S&P. So even though the S&P is on highs, if the S&P pulls back, it's probably not going to have a major effect on this thing because this thing is going to be driven more on, all the day traders following it on their radar type of thing. So not bad. Not bad situation. I mean, it closed today up $1.70. If you want to try to buy into that tomorrow, or maybe you could get like an inside bar or something. But again, with these, it's just like you have to just be willing to take the risk and go for it on something like this, right? In this type of situation, because that's basically what you're anticipating. And that nice higher low consolidation could at least give you a range breakout attempt. It doesn't even have to fully break out, and you can do okay with something like that. So not bad. Not bad for a slightly more aggressive swing trade, okay? So thanks for asking about AMC. Okay, Costco and Affirm. Costco. I haven't heard from that one in a while. Is that Cost? Oh, man. Look at this. So if you're in Costco, beautiful chart. Clearly, higher lows, higher highs everywhere. Are those all-time highs? Yeah. All right. So are they? Let me just go back further. Yeah, they are. So what do you do here? If you're in Costco, definitely take something off the table. All right. This is like ridiculous mode, right? Something that just goes vertical like this and never pulls back. Might as well be an altcoin. What is this? AXS? So take something off the table if you're in it. If you're not in it, nothing to do here because you're chasing at the top of the market. All right, S&P, NASDAQ are basically on their highs generally, and this thing is pushing all-time highs. Bad place to be going long. Good place to be giving it to the people that are willing to take it off your hands. So if you're interested in buying this thing, the place would be here, 457, right? This area right here. This thing right now is at 4. Man, that's a good 40-point move, right? 40-point pullback, something like that. So yeah, way high risk up here. This would be your first support there. And if price breaks that for whatever reason, then you're looking at, this leg here. Now, something like Costco, what is this price here? Hold on. 441. If you notice, I'm willing to bet that this higher low right here, see that higher low? Coincides with the S&P higher low that we saw a couple of weeks ago. Wouldn't be surprised. Now, Costco, as we know, is a what? Retail stock, right? And what season are we in right now? Retail holiday season. It's time to buy presents and all kinds of other stuff. So I can understand why they're going to hype this thing and buy Costco, right, but not at the highs. You should have been long this thing way earlier if that was the game you're going to play. Now you have to wait. Otherwise, you're taking a lot of risk, or if you're in it, unload. Unload some. There's no reason to sell right now. You just unload some and let it ride. Okay, Affirm. All right. Oh, man. I got a lot of questions here. Okay, so I got to wrap this up here in just a couple of minutes. Again, I appreciate everyone sticking it out and listening to me for this long. I have to go here soon. So I'm going to answer a few more questions. Okay. So I'm going to skip affirm because I answered one question. I try to keep it to one per request. So thank you. Come back to my next stream and I'll and ask again, Bart, what's the difference on the trade if the asset value is $1 or $50? Okay, Bart. So good question. The difference is the magnitude of movements, right? So I guess you can basically express the same idea with size. Something that's $50 is going to move differently than something that's $1. Something that's $1 obviously is going to take a lot more to move it, and it's going to be a lot noisier. So that's the way I like to think of it. So that's why I prefer. So yeah, I mean, you can make up that difference in size because again, we're looking at when the day is over, it's all percentages anyway, right? You just with the larger coin, you're just going to take smaller size. But I also like to consider the noise. And that's one thing with these sub-penny or these cheap coins, they tend to be noisier, and I don't like that. Okay, so they tend to be better for longer-term plays if you're willing to take that risk or you're keeping it as a smaller percentage of your portfolio. Because I don't really like many of these things for long-term to begin with. But that's how I would characterize the difference. So good question. It's a very subtle difference, or I guess it just depends on how you think of it. But you're generally, what you're saying there is correct. Okay. Hey, Kai. Okay, right. Okay. Bart, on the chart, Phil looks like it may get a catalyst this week when Adobe released NFT feature that uses IP. Oh, that's interesting, Bart. So, yeah, that NFT stuff is out of control. Okay, it's out of control. So and someone had mentioned in our chat room earlier, someone was talking about... what was it? Dot. Someone had mentioned Dot. It was Alice mentioned Dot and talked about an event that's, oh, look at that, right? So that's why he mentioned Dot. There's some kind of event they're going to be, something is going to happen this month with this thing and blah, blah, blah. And look at this breakout. And he was saying that there's going to be a lot of demand for Dot. When there's some kind of event tied, and this is a good example, when there's some kind of event, right, they're buying it now. So it's being priced in now. This is the breakout. You can't chase this, or you can, but like I said, your risk is going to have to be defined by this $40 level. So here's the thing. Do you buy it and expect on that news that this thing is going to double or triple? No. You buy the rumor, sell the news. So this could be being priced in now. That's why you don't want to chase. You want to be prepared to sell into that news. Because when the event comes out, how many times have we seen that with like Bitcoin? Or even these stocks that they report good numbers and then a thing turns red. And like, doesn't make sense because it was buy the rumors, sell the news. It was priced in. So just something to be aware of. I mean, maybe this thing goes berserk for whatever reason, but never mind berserk. Stop chasing money. Focus on risk because that's what's going to protect you in the long run. This game needs to be, your mindset should be a defensive mindset. If you want to be in this game in the long run. All these people with the greed mindset, I need to make money. I'm going to be a millionaire if I just buy 10,000 SHIB. Yeah, right. Yeah. All you're doing is taking it off someone else's hands, okay? And you're chasing these dreams. It's not very helpful in the long run. So anyway, thanks for asking. Good question. All right, Phil, okay. Okay. Oh, okay. So Alex, take a look at FET, all right? I have Xpeng. Okay, so I'm just running through the chat here real quick. Hey, Travel, good to see you. All right, just running through here. Okay, just running through here. Still interested in seeing your analysis of the stock. We were talking about, oh, okay. Are you talking about Phil? I think I went over both, right? Did I go over Phil? Phil, the coin should be, sorry. Oh, all right, so I went over the wrong symbol. All right, we'll take a look at Phil. I think I went over this. All right, anyway. Oh yeah, we went over this. I'm just going back here real quick, just checking. All right, so what was this question here? FET, F-E-T. All right, F-E-T, and then I'm going to wrap it up here. So fetch, interesting chart. Now, we have bullish structure generally, right? Look at this higher high up here. Okay, nice. Since then, we've been consolidating. Okay, fine, no problem. Now, look at this breakout attempt. For whatever this, I don't know if this is a bad tick or something, what this is, but that's what I mean about these false breakouts. Someone, again, whether they hyped it or they piled into it, whatever, and someone was very happy to say, sure, here you go. And you should not see that, all right? So that's red. That's a red flag. Never mind red candle. That's a red flag. Now, current candle is trying to give you this bullish pin bar, but that long tail, forget it. So I like the general idea of the higher low consolidation, but watch for these range lows. Look at this support right here, 71 cents, right? Watch this area here. Or maybe it pulls back somewhere near there, maybe in the lower 70s. Look for a reversal there. Do not chase into this mess here. Look how many times it failed. That means more and more people are getting long, and they're getting stuck, and they're hoping. Okay, they're hoping. They haven't banged it out yet because you haven't seen any support breaks. If this thing breaks support, if you get a red candle here and it breaks that support, you're going to have a lot of longs stuck in this thing, right? And you're going to see a lot of banging out. And your next support is going to be here, 58 cents. So just something to keep in mind. It's not a bad idea, but the breakout, the follow through, there's a problem, right? Why is it not following through? That's what you need to keep an eye on. So like, for example, if you had taken this breakout, right? You took this breakout because you saw this and blah, 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 and then it closes like that, and the next candle looks like this. Once it takes out that pin bar low, which actually it took it out, you should take the loss, okay? That's a great example of how you should make an adjustment when the market doesn't behave properly. And when you're taking these breakout type of trades, don't be surprised to see that pretty regularly, failed breakouts. And then occasionally you'll get one that goes and follows through, and hopefully in that one occasion, you could make back all these stop losses that you're going to have to take, right? That's the game you're playing when you play that game. I don't like that game too much. Anyway, so that's fetch. Not a bad general situation. Just wait, let that price, wait for a better price, or at least a better price structure or something. And, you know, and then the higher high is likely to follow if this structure could stay intact. I'm guessing there's some news behind this thing. All of these things, basically, they need some kind of news to get them going. Okay? All right, guys. Yeah, but so I went over Phil, though. I went over Phil. Well, that was an interesting stock, right? That was an interesting stock. But I think I went over, these all look the same to me. So I'm thinking I went over this. What's the price? 62. I can't remember now. All right. Anyway, your support is there. 54, basically $55. Your support is there. Okay, and right now you're in the middle of this range. I think I went over this. Middle of the range, nothing to do here on FIL, USD. All right, just wait. Either it pulls back, gives you another reason to buy, wait for another buy signal. But in this point, at this area, you're in the middle of the range. It's highly random, nothing to do. So either you get a little mini high or low, you get a double bottom situation relative to this low, followed by a reversal. If it breaks these supports, if it breaks 54 or whatever, that's not a good sign. And you should then wait for more stability or the next support, which would be 41 area, this low over here. All right, just some levels to keep in mind in case I went over something that looked similar to this and not this, but the charts look so similar. Anyway, all right, you guys, so I'm going to wrap it up there. I really appreciate you guys sticking it out for me. I know I talk a lot and I could feel the strain on my voice, but okay, so let me just see. All right, so everyone, thank you. If I missed your question, please come to my next stream. If you haven't subscribed to this channel, just subscribe so you get a notification for my next stream and ask again there, and I'll be happy to review it with you. Let's go over, let me just put the Bitcoin chart back up on here. So again, the main thing for the next few days is keep an eye on those economic reports, all right, FOMC, NFP, and just keep in mind that you may see a lot of erratic price movement going into those reports because volume is likely to get less and less. And that's because larger players know better. And there's a lot less people playing because they don't want to make any decisive moves going into an event that can have such a random outcome. They want to make sure it's out of the way, right? Or let the market figure it out and then adjust from there. It's too high risk. And professionals, what they do is they manage risk. They don't sit there and say, yeah, I'm going to be a millionaire by blah, 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 because this YouTube guy told me. That's not what they do. They look at risk. And that's what I'm hoping to convey here to everyone. And that's why I'm so hard on those fake gurus because they always convey this idea of easy money. They convey this idea of, I mean, how many times am I going to read millionaire in these stupid titles? They shouldn't be putting that, right? But clickbait, whatever you want to call it, getting people to click on it. I understand they're trying to sell stuff. I understand, but that's really, you shouldn't mislead people like that. There are a lot of desperate people out there that will put in more money than they probably should and not realize the magnitude of risk that they're taking. And if they don't have the experience, they're not going to know how to adjust. And what they're going to do, which is natural, is go into hope mode. And hope mode has been working for the year and a half because, the Federal Reserve loves to print money and blah, blah, blah. And we all know how that goes, okay? But at some point, hope mode is going to catch everyone, just like it has many other times. And all this little money that you're making here and there, you're going to give it back when the market breaks, right? Now, again, I'm not trying to be bearish here, but markets cycle and markets do break. And, when that happens, you need to take losses. And you need to make those losses small. You need to keep them under control. But when you go into hope mode, there is no control. You're just hoping the market comes back, and the market can just keep going against you and against you. And if you're using margin, okay, if you're using leverage, then you're probably in a position that's too big, and you know how it goes, right? So I don't need to lecture you on this stuff, but that's what I'm saying, and that's why they should be more realistic. You're not going to be a millionaire anytime soon buying 100 million SHIB coins, right? While anything is possible, it's a lottery ticket, and it's a very low probability situation. Most likely, if you're buying all those coins, all you're doing is taking it off someone's hands. Because like I said, if that's the case, and all these coins are going to 10x or 100x or 50x, then why is anyone selling them? All right, just something to keep in mind. Okay, anyway, all right, you guys, no problem. No problem, Kai. I'm glad people get something out of my streams. That's the whole point. I want you to have confidence, and I want you to be able to see these things like I describe them and just be prepared. And most importantly, develop that defensive mindset, okay? Looking at risk first. And if you do that, yeah, you're not going to win all the time. But if you're protecting yourself, then you're going to be in the game. You're going to stay in the game, and you're going to protect your capital. That's more important than making money, because that will allow you to have the capital available when there are opportunities that are just not obvious right now. If there's some kind of dramatic pullback on Bitcoin for some reason that no one's talking about right now, you will have some money to put to work at good prices, right? And we see them rarely, but we've seen them over the years, right? And we've acted on them. All of our members know what we've done. So those situations are rare. And the way you get to those situations is you have some money, you're not discouraged, right? You're confident because you know how to manage your risk. All right, anyway, so that's enough of that rant. I'll leave you with that. Again, if you want to know more about Greenbridge, check out our website. There's links in the descriptive portion here on the video. We have a 7-day free trial and all that stuff if you want to check it out. The chat room is a little bit more active, but this week might be a little tough because of all that economic news coming out. So just wanted to let you know about that. Otherwise, I'll leave you with that. All right, everyone. So yeah, Kai, that's exactly right. All right, so wherever you are in the world, enjoy your day, enjoy your evening, and thank you so much for watching.